few more bulls in before it can push it down. And remember, what happens is, and this is why those next moves are so big, is as people buy on that little uptick and become bullish, when it finally does break down, they're the ones that are also selling. I mean, I think the worst rookie mistake is if you think it's going to start to rally going all in, right? You know, number one, a sideways move is generally what we call a bear flag, so you have to look at it and say, okay, at some point this probably breaks down. Doesn't mean it's not going to bounce first. Like, I can see a bounce back to 25. In a weird way, in terms of psychology, I feel like because it's been going sideways for so long, a lot of people are kind of like losing hope and getting more bearish because it's just not rallying and they're getting more and more frustrated with it, which to me almost signals maybe we get a short-term relief rally because the market has to pull more, and this is psychology, right? It has to pull a few more bulls in before it can push it down. And remember, what happens is, and this is why those next moves are so big, is as people buy on that little uptick and become bullish, when it finally does break down, they're the ones that are also selling, which adds to the momentum to the downside. So again, either way, the macro for me is it still has more downside to go, but it's the psychological side of, do we need to pull in a few more bulls first? Do we need to see those tweets that the bottom is in, you know, and all these things before it starts to do that? And by the way, on the psychological side, part of my call from 65 to 20 was that you had a lot of those psychology signals. I mean, in fact, that was probably 50% of the ability to call the top. It was that you saw this hysteria, and it coincided with this event, which is really crazy, but more importantly, it coincided with the futures ETF launching. Yeah. And one of the things I always bring up to people that it shocks them, and because people have very short-term memories, but it's that in 2017 when Bitcoin topped, it topped and coincided with the futures.
Yeah, CME.
And then this was the futures ETF. So there was a lot of hype around that. And that hype adds to people chasing, which then coaxes the last, psychologically, right? It coaxes the last few buyers that were on the sidelines. Now they're like, oh, I can't wait anymore. But think about this. If you get the last people that were on the fence to buy, after that, who's left to buy? You know, you run out of buyers. Yeah. And then all it takes is a little downtick, and some people are like, all right, I'm exiting. And then that pushes it down more, and then more and more people kind of psychologically start to unload. Then you have the people that just don't want to give up. They're the maxis, right? Yep. And then they're like, all right, well, I believe this is going to be 100K by the end of the year or whatever, and they're just like, I'm going to ride it down because, you know, and again, that's okay. I do believe in Bitcoin long term, but for me, it's like I always say to myself, if the chart is telling me there's an 80% chance of a drop, why wouldn't I exit at least some and then just rebuy lower? Now, you could be wrong, but 80% success is like pretty high. And there's still a huge amount of people that are playing with a lot of leverage, you know, and that still surprises me because, you know, the volatility in crypto, I mean, it just can wipe you out so quickly. There's one thing about the market is when you want something badly, the market will almost never give it to you. It's when you don't care or when, you know, that's when, and part of that is psychology, right? It's not feeling the pressure, which then makes you react emotionally. Going back to the psychological side, the market has this way of testing people's greed and fear to the max. Yeah. To you know, like we said, like at 69,000, and it was just piercing those highs from April of 2021. It was like if you were just still skeptical, that was like the last push to be like, all right, I'm missing the boat here, and then what? Of course, that's the top. I mean, thousands of times, right? I mean, remember, I trade stocks too, and commodities, so there's so many situations where I miss it. But the thing is, like, so let's say you get a big move up in a chart, and so like as soon as it starts to move up, I'm like, all right, I'm not going to be, and it's like that not wanting to be the follower. I've always been a leader, right? And so you want to be the person buying at support because that's technically where you should be buying. Yeah. And once it's bounced off support, it's just very hard to quantify how high of a bounce it's going to go. I mean, is it the new bull market or is it just a little uptick before another leg down? So I've been burned too many times doing that. And then that basically puts me in a position to say, okay, if it does continue up, then what do? Well, I won't chase it. But if it starts to consolidate and put in a bull flag, that's a new setup. And so maybe I'm not buying it back down here, but now it's giving me that patience and that setup that tells me, okay, there's another move coming. And so it's just waiting. Like I'm a big player on factors, right? So a factor could be support, it could be a time count, it could be a bottoming tail, it could be a gap fill. I mean, if you get two, the odds of success are huge. 3 is even better, but 1, I'm like, okay, well, 1's good. But, at this stage in my career, too, it's like I'm risk adverse. I'm becoming, especially with a family, it's like you don't have the luxury to be like, well, if I lose my whole account, no big deal. No, dude, that's like, no, it's not. No, it's not. And to be honest, I've made more money being like that and being conservative than I ever did when I was aggressive. Think about that. It's so counterintuitive. It's like, you're aggressive, so you're going to make more money. No, because at some point you're wrong, and then you're usually wrong big. A little longer, Mike. Exactly. Even that the sales come in. And I think the same thing about that is the patience and like a trade. If you look for a trade, that's like you said, is going to be the troublesome issue. But I always say to my traders in my live trading room is like, you shouldn't have to search for a trade. When you flip to a chart, it should I almost liken it to like it jumping out of the screen, smacking you in the face like back and forth, like, dude, holy cow, like, oh my God. That's the trades you want to take, the ones where it's just like, okay, this is everything in alignment. Now that's your high percentage opportunity. Okay. Yeah, so for me at least, so number one, even when it seems like a sure bet, I've learned the hard way that there's no such thing, right? So I'm never putting in, like, let's say I want to invest 10% in Bitcoin or whatever. I'm never going in with my full 10% on my first buy, because even in fear periods where something's coming into support, fear can drive things a little bit lower before you get that reflex. And so dollar cost averaging is number one. That's like super helpful. And what you have to do here is it's people like dollar cost averaging to some people are like, okay, I'll do 10% here because I hope I'm right that that's the bottom. But if I'm not, I'll put another 10%, then another 10%. And it's like, no, if you number one, you figure out your size of your trade ahead of time. And then you say, okay, I'm going to do 10%. So then you figure out, okay, well, how many opportunities down? And you have to divide that 10%. So like the normal thing is like, I hope I'm right. Okay, now I'm putting in more. Okay, now I'm putting in a lot. Now I have way too much on the table. Not good. Emotion comes in. We talk about emotion. Yeah. That's where Bitcoin or any chart is going to push you to where you do the wrong thing. So you have to do it in parts of that initial amount to do it, I think. And I think that's so, so important. Probably is the most common thing that every trader deals with, which is when you see something moving up or down, you see, and everyone starts talking about it, it's to actually like have those reins on yourself and then step back. It's almost like you're in the bubble with everyone else and you need to step out of the bubble and look at it from a distance and say, okay, yes, this could go up like everyone's saying, like Bitcoin could go to 100,000 or 200 or 500, but wait a minute. There's way too many people that are saying this, and one of the things you look for, and this you can see on Twitter. Twitter's actually, if you can mitigate, Twitter is a great asset to be able to kind of get an understanding of how crazy things are getting, right? So when you saw people saying that, like, Bitcoin was going to hit it's 100K that month when it was at 65, and then 250. That's where things get way too like, okay, what are these people smoking, right?
Give me some of that.
Right, yeah, seriously, I'll take some.
Happy land.
Yeah. So, when you start to see crazy stuff, like with AMC and GameStop in the stock market, it got so crazy where people were like, okay, the stock has run from $20 to $500, but it'll be $3,000 next month. It's like, wait a minute, all right, this is where I need... So you have to be able to separate yourself from the hype and be grounded. And sometimes, honestly, you need to get burned a few times to do it. I got burned plenty of times, and then finally you're like, all right, I did this 10 times and it never worked, so maybe I'm doing it wrong here,